Good afternoon, traders. This is Jefferson Fossey here with Walsh Trading. Happy Wednesday, everyone. It is Wednesday, December 10th. It's a little couple ticks here after 3:15 in the afternoon. I apologize. I've been gone for the last couple weeks. Had some health issues that I had to take care of. I think that's all been solved right now. So what we're going to do here today is take a look through all of my charts, all the markets that I follow here, and tell you what I think. See what's going on in the market, what might have happened here this week, what might happen tomorrow, what might happen next week. Please keep in mind that futures trading does involve substantial amounts of risk. Certainly not suitable for all investors, traders, or producers. So we're going to start off here with February live cattle. February fats here today, 228.52, gaining a $1.57 here on the day. Highest close that we've had in this market got to go all the way back to November 3rd. So we're making 1 month highs here in the live cattle. They've been coming up pretty nicely here since a couple days before Thanksgiving. Of course, they've all been selling off here because the administration, U.S. government administration, wants beef prices to come down. But I don't think we have a magic wand to do that. We don't have a magical calf-making machine. We just plug in the corner somewhere and turn it on. It's going to take some while to rebuild this herd. We've had cattle on feed report here couple weeks ago here as well. The herd is still small. We still have less cattle. We still have more people to feed. So I do think the market wants to continue to go higher here through at least the first half of 2026. But where are we at here today? And since I've given you an update here, well, short-term averages, 5-10 day, they are on the bullish side. They turned that way here Wednesday, December 3rd, a week ago here. However, the longer-term averages, or I would call this maybe medium-term, the 50 and the 100-day kind of flipped over to the sell side here right around the 1st. So you got a sell long-term trend shift there. You got a short-term trend shift here. I'm going to stick with the short-term and the overarching long-term trend. We just cleared last couple of days here. You see the Fibonacci retracement that I've got drawn here on the chart. We're just clearing up above that 50% retracement level. Kind of paused there with last Friday's trade. Cleared it again here on Monday, couldn't close above it. Higher highs, higher lows on Tuesday, couldn't close above it, but today we are closing up there. I do like this market from the long side. I think Feb cattle from here can want to go up and try to fill in this gap. Check that October 24th low. That's 233.42. I think that would be a reasonable upside target. You are going to have some resistance. The 50-day might give you a little bit of headwind here. 229.06. I've also got the 100-day here at 231.59 before we get there. But I do think the cattle want to turn themselves around. Yeah, we just have less cattle and more people to feed here. Looking over to January feeders, same kind of thing, although not as much of a recovery here yet in feeders like we've seen in fats. They have been doing the same thing. The charts look very similar, but there's more gaps here on the feeder chart. And we did not clear any major resistance. We've not cleared that 50% retracement here. That's a 339.85 reference to January. Closed at 338.37 today, up 287. Nice little gain. But yesterday's highs, 338.67. We did have higher highs, higher lows here today because we got up to 87 there, but not a whole lot of momentum behind it. 5 and 10 day moving averages are in bullish territory. We did close up above that 5-day here today. The 50 and the 100-day very close into the market here. They're up right around this 339.59, 340.27, and they have made a little bit of a bearish crossover here with today's trade. Not aggressively, and that 50% retracement's at 339.85. If we can get up another $1.50, I think we'll probably have a nice target up here toward that next gap in line. But we've got the holidays coming up. Trading volume might kind of dry up in a lot of these markets, and cattle might be one of them. Looking at the lean hogs here today, we were up 55, closing at 82.42 here in the February contract. Big spike low here yesterday, Tuesday. We got down to 80.65 before we closed today, 81.87 here yesterday. Today we've got higher highs, higher lows, and the highest close in the hog market got to go back to November 11th, so almost 1 month highs in hogs. We're below a lot of these long-term averages. So the short-term looks pretty bullish. 5-10-day giving us some support, and they're both inclined higher. The 5-day is going to give you nearby support 82.16, I believe. But we've got the 50-day giving us resistance here, 82.93. Got the 200 there, that long-term trend measurement. That's at 83.50. We were really going to need to close up above that before I think people start getting exceptionally bullish here on the hog market. But we have retraced here, since we made our highs in late September. Market trended lower here until just before Thanksgiving, starting to hook right back up here again. Short term, it looks pretty positive. Stochastics pointing toward higher prices, and is the MACD down here as well, to see if we can get through that long-term resistance there in the hog market. Switching over to the grain markets. Now, yesterday we had the WASDE supply and demand numbers come out here with the December numbers here. Didn't really change a whole lot. The USDA didn't change a whole lot on the balance sheet for the corn market. They didn't change anything with production. I think all the production number changes might come here in January. That's typically when they reset everything here for the year. But, kind of a muted reaction here to the USDA report yesterday. Corn, I think the report could be construed as mildly bullish. Ending stocks were cut just a little bit, but not enough to make everybody ragingly bullish. Still have that 200-day moving average there. That's a 447.25 here, reference the March. Short-term averages did flip over here and change the trend to a short-term sell signal here, but we're also holding right up above trend line support right there. And then I've also got 50-day moving average support here in corn at 441.25. We've been higher, we've been lower, but basically since October 27th, right before Halloween, market's just kind of been sideways. I'm not extraordinarily bullish on corn. I think we can get to 460, maybe 465, 470 or so, but probably not going to see gains like that until first part of next year would be my guess. Still like corn from the long side, just don't expect it to make any huge moves just yet. January soybeans 4 cents higher here today, started the day off making new lows. Now we've been very weak here really since all month. We had a big bearish engulfment here on December 1st. That's pushing the market lower. Short-term averages flipped from buy side to the sell side here on December 4th. We are right at that 50-day moving average here. Today's close in January, 1091.25. 50-day moving average here is at 1091. So just up above that here, slightly below this trend line resistance here. This is just drawing off the highs that we had here in February, connecting the highs that we had here in June. It's a reasonable spot for the market to find support here. I'd like to see it kind of go back and fill this gap. Most of the time they do, but they don't always have to. Today's trade does look relatively bullish to my eye. You had kind of a spike low here, finishing in the upper 20-25% of the trading range here on the day. Not a textbook bullish reversal or anything like that, but pretty darn close, I think, in my opinion. Might see beans trade higher here as we go throughout the week. Now, first notice day for the January contract is going to be on New Year's Eve day, December 31st. So keep an eye here on the March. The volume and the open interest is increasing here as traders do roll out of their positions here from the January to the March contract. March just below that 50-day moving average, just below the trend line here. Stochastics still very oversold, but they are starting to hook back up, and a little bit more of a bullish reversal here to that to the March contract than what we saw in the January here today. Looking over toward soy meal, January soy meal started the day, and overnight it was pretty weak, got down to 298.70. Reverse direction here a little bit, still finished in the red, down just a dime or just a tick lower here at 301.20 in the January. Getting a little bit closer than soybeans are to filling in the gap that we left to October 24th. That's roughly where you've got that 100-day moving average. That's going to give us support here at 297, but we are back up above that big fat round $300 mark when we broke through here back in October. That kind of set the market off to the races. We did have crush numbers here today. Soy meal production, soybean oil production, ridiculously high levels. Yeah, that's kind of bullish for the soybeans, I would think. But it might be a little bit bearish if we can't get the meal and the oil sold and consumed. Looking over here to January, bean oil 7 ticks higher here today, 51.09, closing just above that 50-day moving average. This is not a real pretty chart here as of late. Bean oil market has been very choppy, had kind of more of a sideways direction than anything else. We are holding up above that 200-day moving average. That's giving you support here at 50.34. Resistance is going to be that 100-day average at 51.47. We might see the market just kind of stay in a trading range here. I'd like to get all bullish on this and see that it's going to go higher. Just don't see the chart turning that yet. Short-term averages did flip over to the sell side here with yesterday's trade, closing above that 50-day average. Gives us a little bit of bullish support. Yeah, we'll see where bean oil goes from here. But yeah, record production here as far as the crush goes. You know, it's just starting out at a pretty big level. What, 2.8 billion pounds of bean oil produced here in the month of October. Which is a record, and the pace that we're on right now would also be a record here as well. So we might have exceptional production here in bean oil and meal, but if we can't sell those byproducts or can't consume them fast enough, it'll be bullish for beans, but maybe not so much for the products. Looking over here at Chicago wheat, this is the March contract, 529.5 today, down a nickel. Did drop down to well over 1 month lows here. Today's low got all the way down to what, 525.25. We closed 529.5. Still the lowest close that we've had here. Got to go all the way back to October 24th. And we did close right just above that level here that we finished at back then. Off the lows here a little bit, but overall lower lows, lower highs. Wheat production from the WASDE here yesterday. We kind of know where the U.S. stands, but the rest of the world's had a pretty good wheat crop here this year. The EU, Russia, Australia, yeah, they've had us, Canada. Everybody's had good weather here for growing wheat this year in the calendar year 2025. Canada even just posted a record in wheat production, so it's awful difficult to get real bullish about wheat just yet. I think it'd be a tough ask to see it sink much below $5. That's way down here. I don't see a 4 print here in front of wheat, at least in the future. I don't think anyway. Short-term averages, they are on the sell side. We are back below that 50-day moving average after trading both sides of it here for about 10 days. But breaking down below that here today may give the market a little bit of momentum. Might see it revisit those contract lows that we set here in the middle of October. That's down to 508.5. Yeah. Big wheat crop around the world. That's kind of weighing on the rest of the grains too. It's keeping the corn from rallying. It's holding back soybeans when they get a little bit bullish. Yeah, wheat didn't have a real strong close here today. KC wheat, same thing here. 50-day moving average closed below that here yesterday. We had a little bit of an equilibrium day, kind of a doji here, opening and closing at the same price yesterday at 527. Today's close is a directional bearish close. Yesterday's low was 523.5. Today we closed 523.25. So it's a directional close by just barely, just a tick. So it's not really enough to push any real momentum to it. But much like Chicago wheat, KC wheat's having a real hard time trying to find a rally in here. Really been sideways here since the week before Thanksgiving here. Haven't really seen much of a direction. It's been up a little bit, down a little bit, kind of on the low end of the range we've been at for the last 3 weeks or so. And the long-term trend here, I mean, the 100 days still pointing down, 200 days way up there at 570. Not a whole lot on the wheat charts to be bullish about. Slipping over to the soft markets, starting off with March cotton here, 26 higher here today, 64.12. Didn't have too much of a reaction to the WASDE report yesterday here in cotton market either. We did have lower lows, lower highs, but today we got higher highs, higher lows relative to yesterday. Closing higher than we did here on Monday, so we are actually up a little bit here in March cotton on the week. Short-term averages did flip to the sell side here with Monday's trade, but I think that spike low that we had here on November 21st might keep this market from going down here for a little bit. I think that might be a supportive level. Rallied up a little bit, started coming back down, red days for what, 6 days in a row here. Now we're starting to hook back up. If we can take out those highs from that we had right after Thanksgiving, or that 64.95, it could set up the cotton market for a nice rally. I mean, look at this. If I look at the long-term chart here on this, it's been going down for a while. Looking over here to the sugar market, 23 higher here for the March contract today, closing at 14.90. Contract made its low here the first week or so of November, rallied up, ran into that 50-day moving average here the last Friday here in November. Now we've pulled back, obviously have not made new lows. The lowest we've been here was, well, yesterday's trade, when we got down to what, 14.52. Today's close here at 14.90. Short-term averages are on the bearish side, but I think we're going to make another test of this 50-day. And if we can get through there and take out those highs from the end of November, could signal that the market is changing its short-term trend here a little bit. March coffee's 290 higher here today. It's been basically lower here on the week. Big sharp down day here on Monday, 865 lower. Kind of a very quiet inside day here yesterday. Didn't really go anywhere. It was up 255. Today we're up another 290. Did run up, test that 50-day moving average, failed. Market came right back down. Couldn't get up above the 5 or the 10-day moving averages here in March coffee either. Market's been very congested and very kind of choppy here over the last, well, I'm going to go back here to the beginning of September. I mean, we've seen highs, we've seen lows here within a week or so of each other. A couple, 4 weeks later, we're setting new highs for the move, then it pulls back. No new highs for the move, but we did set a new low for the move here. Friday, November 21st, but of course the market bounced right off of that here. Coffee market looks to my eye like it kind of wants to go sideways here for a little bit. We are below that 50-day moving average, so it might be sideways with just a hint of a little bit of a downtrend here as we head into the holiday season. March cocoa turning itself around. It's up 341 here today. Short-term averages turned bullish here on the first of the month. Yesterday ran into some 50-day moving average. Had a doji on Monday, equilibrium day. Bullish confirmation close on Tuesday, extending that here further today. I do like cocoa from the long side. I think for in the short term, at a very minimum, we're probably going to head up to 100-day moving average, which is what, 66, 68, and that puts us roughly in line with those early November highs. If we can take those out, well, we could see a sustained rally here in cocoa. But if I just put a simple little trend line here across these recent highs, well, we did clear that trend line resistance here today, and that could set up the market to continue to work its way up here. Cocoa in the short term, I do like from the short side here. Flipping over to the metal markets, gold's up 21 bucks here today. It's not had much of a directional push here as of late. Still staying in these high ranges. And these high valuations, but the market's really not had much of a push behind it. We did get the Fed meeting here today where they did lower rates, interest rates by a quarter point. I'll talk more about that when we get to the bonds. Gold market seemed to like it though. Higher highs, higher lows, up 21 bucks here on the day. Short-term averages are still on the bullish side here. Turned that way just the day before Thanksgiving. Set highs here on December 1st, traded back just a little bit. Now we're starting to get a little bit more upward momentum to the gold market. In the long run, I do think the metal markets want to go higher here, especially silver. Silver's setting contract highs, record highs here today. March futures at the moment, $1.36.5 higher at 62.21. Very, very strong move. Started it here, really this kind of breakout here yesterday. Yesterday we were up 243 in the March silver contract, breaking out of this little bit of a consolidated range. We've been here for about 6 days, breaking out, pushing out to the upside. From here I would see the next target that I would have, nice big fat round number of $65 an ounce even. The market is relatively overbought. You can see the stochastics here, but it's been like that. Well, it's been more content to be overbought than it has been to be oversold all year long. So yeah, I do think the silver market wants to go higher. I think it's probably got more legs behind it than the gold market does. Gold's already in an awfully high level, and it's been making record highs as we've been making new highs in gold, while silver's just recently been making record highs, and I think it still has a ways to go here. March copper. Up 8.5 cents here today, 540.5. Here's the last trade I show. A little bit of profit taking, a little bit of a pullback to start the week. Monday we were down almost shy of 2 cents. Yesterday we were down almost 12.5. That's a pretty big push down, but 10-day moving average support held. Market did bounce off of that here today. And we're currently just barely above the 5-day moving average. 10-day turned bullish here in copper on Friday, or excuse me, on December 1st. No, Friday, November 28th. They turned bullish. I think as the world starts to move manufacturing capacity around the world, and I think here domestically in the U.S., we're going to see a lot of capital expenditures here by a lot of manufacturing companies into 2026. They're building new factories, building new assembly lines, that kind of thing. And we're going to need copper, one, to go into those buildings, but we're also going to need it into the things that most folks are going to be building here as we move forward. So yeah, I like copper from the long side here as well. Looking over toward the currency markets, U.S. dollar down 54 here today, 98.63 is the last I show. This is going to be the lowest close that we've had here since October 29th. So you're making basically month and a half or so lows here in the dollar. Short-term averages are on the sell side. We've held that 50-day moving average here for the past 5 sessions, but fading away from it here today with the Fed cutting rates. I wouldn't get necessarily too bearish on it. I do think we're probably going to find decent support here right around 98.32, which is where you've got that 100-day moving average. At the moment, I wouldn't, unless we get some sort of swan type event, would not expect the dollar to fall to new lows here. We hit those in September when we got down to 95.84 half. I think we're probably going to pretty content to stay in this trading range here in the dollar. Might pull back a little bit to that 100-day moving average, but in the long run, I think it's got a little bit of an uptrend to it. Looking over to the bond market here today. This is the 30-year Treasury bond here. 115.16 is where we're at here today. Up 10 ticks on the day. As expected, the Fed did lower rates by a quarter point here today. They seem a little bit mixed, or as far as Powell's press conference, but I don't think that we're really going to see too many interest rate changes until we get his replacement in there, and I don't think that's going to happen until May of next year. Bond market, below that 100-day moving average, that's going to give you resistance here, 115.28. 5 days giving you moving average resistance here around 115.15. Right now we're currently up above that here just a little bit. Market's been trending lower, well, pretty much since we set the highs here in late October. But it's certainly making new lows for the move here with Monday's trade. We set that high here in October, pushed down to a new low, rallied back up for the move anyway. Rallied back up, did not set new highs, pushed back down, another new low here for the move on Monday. Now we're pushing back up a little bit. I think the bond market might find some resistance right around that 116 even area, which is roughly the lows that we held through most of the month of November. Similar commentary here for the 10-year notes. Up 7.5 here today. It looks a lot better on the 10-year chart than it does on the 30-year bond. Big bullish engulfment here going on here in the 10-year notes today. I think that, again, that's just a reaction to what the Fed did here today, cutting rates by a quarter point. Market's been kind of factoring that in, kind of expecting that. We're probably going to see a little bit of a profit-taking bounce on there. There is some resistance from the 5-day moving average. That's a 112.12. 100 days of 112.16.5. I'd be shocked if we see this market get up above that 10-day moving average, which is up at 112.24 half. Expect a little bit of a bounce as people kind of take off their positions but I think the bond market does want to rally just a little bit. Speaking of rallies, let's look at the stock indexes. Stock market really liked the rate cut here today. You've got the S&P up 43.5 or so right now, 68.91. Doesn't stop trading here for another 20 minutes or so. If we close right here, this is going to be the highest close. Got to go all the way back to, well, the contract highs that we set here on October 29th. That's pretty strong here for the S&P market. 5-10-day moving averages are in bullish territory, and they are giving us support. We're up above both of those right now. 50-day moving average is held as support. We even tested the 100-day here late in November, bouncing up off of that here as well. Market stock indexes do like the fact that we cut rates here again today. I think that's probably going to keep things pushing higher. NASDAQ futures up 96 here today. Trading here, what, 25,795. And yeah, higher highs certainly, but we also tested lower lows relative to yesterday. Same thing with the NASDAQ. We close here. This is going to be the best close that we've had here since November 3rd. Tech stocks, I mean, this is a smaller basket than the S&P 500, index of 100 stocks only, but I do like this market. Also, stock indexes do look good. They want to head higher here as well. Look at the Dow, 539 higher here today in the Dow futures, 48,152 reference the December contract. Same thing there. If we close here, this is going to be the highest close since we had the contract high close on November 12th. This is bullish. Big push up here for the Dow. Now, this is the smallest basket. This is an index of 30 stocks, but those 30 stocks really did seem to like that here, and that's going to push the markets higher. The Russell Index, 2,000. This is the broadest market. There's 2,000 stocks in there, and they are pushing up to new contract highs here today in the Russell. Pretty strong move there. Broader market seems to like this market move. I expect things to try to push higher from here and stay strong. From here, I look for support against those previous contract highs that we set on October 27th. That would be up around that 25.66 level. Today we're trading 25.70 or so. So if it pulls back a little bit, or even just the highs we've had here for the last 4 days, once we broke out of those, I think that's a relatively bullish push. Expect the stock market to continue to go higher. Energy markets. Interesting kind of conflict going on right there. Started the week being really bearish, down $1.20 here in crude oil on Monday, down another 63 cents here yesterday. Started today off heading weaker, got down to 57.66. But here, as we get 15-20 minutes here before the end of the trading session here on crude, well, we're back up toward the highs of the day. Now, I don't think any of this has anything to do with the fundamentals here right now. We did get the EIA report here today. Crude stocks down here a little bit. Gasoline stocks very, very high. We've got a lot of gasoline here right now. Distillates and diesel fuel stocks here up as well, at least from where we were here a couple of weeks ago. So production has been pretty good here, but I think the market's reacting to the fact that allegedly, and I haven't read the news reports on this, but I've seen the headline flashes. Apparently, the U.S. captured or boarded or took over a Venezuelan oil tanker here today. So that's got a little bit of heightened awareness here in the energy markets today. Crude's finished the day up about 66 cents or so. Overall, I think this long-term downtrend stays intact. Most analysts that I read out there are expecting what we typically would call a glut in the oil markets here as we head into the first half of 2026. So I think rallies probably need to be sold unless this dealio with Venezuela turns into something a little bit more. Unleaded gas today just up, 3 ticks here on the day, 179.27, big spike low there. Got all the way down to 176.38. Might just be a little bit of profit taking now that we've confirmed that we've got some pretty decent production going on. Overall, this market has been more sideways than anything else. You've got the 200-day, the 50-day, and the 100-day, all kind of in a flat line configuration. They aren't declining here just a little bit, indicating the trend is down. But you can see by looking back here at the chart, we've been trading both sides of this 200-day moving average since June. We've been higher, we've been lower, we've been higher. Now we're back underneath it. Maybe we come right back to it. That's around $1.8268 or so in the January unleaded contract. Diesel futures here today up a little over 2 cents, about 2.25 cents higher here, 228.30. Kind of an inside day relative to yesterday. Not seeing a big volatility, not seeing a big push or turn higher. Yeah, we're up on the day, but not like the push off the lows here in unleaded gas that we see on that chart. Certainly not closing up toward the highs of the day like we saw and turning this into a big, reversal day like we saw in crude. More on diesel's just kind of trading an inside day here. We're below the 100-day moving average. That's going to give us resistance just above that 230, well, right around that 230.19 area. 200-day moving average below the market, giving us support here, 222.98. It's kind of basically been a flat line here, really going all the way back to the middle of June. 200-day moving average. Market really hasn't moved a whole lot. We've been higher a couple of times. We've been lower than the average a couple of times. Certainly higher here in the middle of November, but now we're coming right back down here again. Geopolitical nonsense aside, I think the energy markets should all be bearish, except with the exception maybe here of natural gas. Today it's up about a nickel, just shy of that here, 462.30 here at the moment. Big spike high last Friday. Got all the way up here to what, 549.60, traded at the highest level. Really, we hadn't been up there since April. And then, of course, got hit by a little bit of profit taking because it was a Friday. Profit taking continued, into Monday's trade. Tuesday's trade, we were down pretty aggressively, down about 33, almost 34 cents there. Today we're bouncing off that 50-day moving average, just a technical little bounce here in the nat gas futures. Winter is coming. Most of the country needs their homes by natural gas, with the exception of our friends here in the Northeast. Keep an eye on this market here as we head through winter. That's all I've got for us here today, folks. If you've liked what I've had to say here, remember to like, share, subscribe. Let people know what's going on here. If you ever have any questions, comments, please reach out. Let me know how I can help. Talk to you all later.